Hi everybody. So Mawson Gold is a company that's been around for a while, but things have really changed and things are really moving forward. And I joined a year ago, and we've really transformed Mawson from being a smaller scale exploration focused story to being much more. And that's been a transition that has really taken shape in the last couple of weeks with the release of the PEA on our Rajaplot project, which is our flagship project in Finland. We've come out and we've said this has got robust economics. There's a lot more to find, and we'll continue to explore. But really, what the PEA has told us is that we've already found a mine. We're not exploring to look for a deposit. We've found that, but the exploration is going to continue to add upside. And the other important things to know about Finland is it is a strategically quite an important asset in Europe. It's not the biggest gold mine in the world, but it's very significant in the context of Europe, because it's also the third. It would be, if it was in production today, it would be the third largest cobalt mine in Europe and the sixth largest gold mine. So we do have, it has meaningfulness, if that's a word, and as we continue to find more and grow more, the value proposition just becomes stronger and stronger, and the PEA has allowed us to demonstrate, and it allows us to allocate capital appropriately moving forward, because we know how to add value to the project. So there's exploration upside, which I'll come on to in a minute. The other thing in Mawson's portfolio, which makes things particularly interesting, and we've got some crazy numbers at the bottom of the page there, is that we own 60% of an ASX-listed company called Southern Cross Gold. Now, Southern Cross has assets that were in Mawson's portfolio, great discovery, was struggling to get traction and recognition in the market. So we spun them out, we raised 12 million Australian down on the ASX, and now we've retained a 60% stake in Southern Cross Gold. Today, that stake is worth 50 million Canadian versus Mawson's market cap of 42. So we've got a negative EV. I don't know whether you can use a EV to P to NAV ratio of a negative. I've never seen it before, but we're in a curious situation where that is the case, and I think it just points to incredible re-rate opportunity as markets normalise. That stake is escrowed, so I think that creates a little bit of the first numbers, but as we move towards the release of that escrow in May 2024, there's a huge amount of value in the portfolio that sets Mawson well. At one end of the spectrum, it's just a huge amount of liquidity to develop the projects we have or future projects. And the other end of the spectrum, it obviously creates enormous corporate finance optionality within the business, and certainly sets things up quite well for the next year or so. Coming on to our Rajaplot project, as I said, it is our flagship project. It's just located 30 minutes outside of the capital of Lapland, Rovaniemi. So it's a great place to be doing business. Finland is, between Finland and Sweden, it really is the home of mining. Finland has Europe's largest gold mine, it has Europe's largest cobalt mine. There's big projects being discovered and developed. Rupert Resources, a lot of you would be familiar with, 4 million ounces in 18 months maiden resource. Anglo's developing the Sakatti nickel copper PGM project. So there's a lot going on there, and they have a long history of mining. It's a great place to be developing a project. The right-hand side there, you see our land holding, our land package, 18,000 hectares of 100% owned contiguous property. There's no royalties, nothing over the project. There's only a small landowner royalty as part of the government royalty package, 0.15%. So very well held ground. We made the original discovery on the property. I don't know if you can see that over on the Rompus trend, 6 metres at 617 grams a tonne. Still the best hole ever drilled in Finland. And then the discovery where the PEA is focused on is this group of assets, a group of deposits over on the western side called Rajaplot, and that's 1 million ounces over there. But what we've demonstrated is a significant amount of gold has flowed through this system, and I'll come on to some of the exploration upside that is very much untested on the property so far. Just quickly on the project economics, you probably read them on the first slide, but it is a very robust project, 200 million US MPV after tax, that's 300 Canadian, that's nearly $1 a share today, and low costs. That's the other thing that people really need to understand, and when you get into the detail, we'll be putting out our PEA report in the next week or so. This is because of the geometry of the asset, the fundamentals of it, and where it's located, it's a very low cost place to do business. So attractive all-in sustaining costs, $824 an ounce. We've got high resource efficiency, and we're getting a lot of the gold in doré that we found. 81% of the gold that we found gets converted to doré, and you've got low corporate taxes, and all of these things combine very well to have a very attractive project, and we see this as the start and not the end. A lot of people go and do their PEA when they've run out of ideas on an exploration, and they're like, okay, well, what did we find? You know, what actually have we found? We're kind of doing that in reverse. You know, this is just a point in sand. It helps us move the permitting on the project forward, and it also tells us what we've got, and we know how we can add value to the project. And I can sit down with the investors and say, you know, we're going to add ounces over here, X number of ounces, what's the return on that? You can put it into the model and you can tell yourself. So we know what we're working with, and we know we're onto something, and we think that as we find more, you know, we know how to impact the value on the project. So there's a lot of numbers on this slide. I'm not going to go through them all. These are just really the technical and the economic outputs of the PEA, but you know, it's a very simple project: underground mining, long hole open stoping, efficient mining conditions with low costs. We've got excellent metallurgy, free gold, 95% recovery from gravity and cyanide, so no expensive and power hungry refractory ore or anything like that. It's very simple metallurgy. We've got a cobalt flotation step at the end of the flow sheet to produce a cobalt concentrate. We've got access to 100% renewable power, so green power, cheap power in that part of the world. Even today, in the European climate today, power is still cheap in Finland today because of the amount of renewables that they produce, hydro predominantly in the north of Finland. And so all of those things combine well to drive low costs, and that's what makes the project economics work so well. And we've got very simple, limited infrastructure needs for the project, again because of its location, and that keeps a lid on the capital costs for the project. So I talked about the costs and low costs, and it's not just the project, it's where the project is in the world which drives low costs. And I think that people that are not familiar with the cost base in the Nordics really need to pay attention to this slide and get to understand what the cost base is like. So what I've got is a graph here of every operating mine, underground mine in the EU, and in the dark blue you can see most of them are in the Nordics because that's where the mines are, and that's on the y-axis is the site costs, so mining, processing, G&A, and along the x-axis is a sense of scale to know if there's economies of scale at play there, and we put our costs on there and benchmark them against real operating mines, not make-believe fairy numbers from other studies who no one really knows whether those numbers are true themselves. These are operating mines, and Mandalay's Björkdal, Mandalay's a TSX-listed company, Björkdal mine, 400 kilometres away, just over the border, very similar cost base in Sweden, same power costs, taxes, things like that. They're all same socio-economic setup. They've got almost exactly the same production scale, 1.1, we've got 1.2. It's long hole open stoping with 20 metre levels, same as our mine plan, grinding and flotation mill. We've got cyanidation and backfill. This is going to add a little bit of cost, but their actual operating costs, this is straight from their MD&A, $38 a tonne in 2020 and $44 a tonne in 2021, and we're using $56 a tonne. So very realistic operating costs. As I said, this is not some make-believe PEA to inflate the value of the project. This is just, we want to get a real understanding of the unit economics and what we're dealing with here, so we know where to find more ounces and how to add value. So I think you really need to understand the cost of doing business, and driven by high labour productivities, intelligent workforce, and low power costs. The project itself is just a simple overview of it, but it is a very simple project: underground mining, simple milling, and almost no infrastructure to speak of. There's a paved highway that comes within 5 kilometres of the site, an existing gravel road you can drive up to within 500 metres of where we're going to build the mill. The only connections, really new connections at all to the outside world that need to be added are a HV power line, 28 kilometres that links directly to a hydroelectric power station. The substation has existing capacity. We're connecting straight up to that, and a water pipeline to take the excess water from away from the underground mine will produce excess water, and to take the water away. And that's how you develop mines in Finland. You need to be able to manage the water. That's key. And we've included allowances for water treatment and to take the water and put it in a river that's got the capacity to take it away. So we're really configuring the project up front for low impact. We are located in Natura, and allowing us, we've built those considerations to permit the project with no significant impact, which is the easiest way to permit, not the only way, but certainly the easiest way in Finland in Natura to develop a project. And so we're just building those things up front so that increase our chances of success. The project is also very well supported. This here is an EU-funded survey that was done on the local communities. It's quite phenomenal, the support for mining. This is the opposite of not in my backyard in this part of the world. Nearly 80% of people weren't just ambivalent, they were actually positive about a mine being built in their hometown. So they see they recognise the benefits that mining brings. Very supportive of the project. We get a lot of local support because we've been good custodians of the ground for the last 10 years that we've been exploring in the area. And we also see good support from the local and regional governments. They're pushing forward a parallel permitting process that has to happen in Finland called land use rezoning. That's being led by the authority, by the governments on our behalf, because they're supportive of the project being developed. Resource upside potential, I mentioned it at the start. It's really twofold on the property. What I call the more simple meat and potatoes exploration on the property is just simple down dip extensions. All the resources themselves are open at depth, and it's really just down to the depth of the drilling we've done. We have Pelocus and Rhea, this ore body here and this ore body here are the two most overwhelmingly most important resources on the project. They contribute 90% of the ounces. The deepest hole is only 550 metres downhole, so 450 metres vertical depth, and it's 31 metres at 5 grams a tonne gold equivalent. So still a lot more to find, still a lot of exploration upside, and like I said, now we've got a PEA, you can add ounces, simulate the benefit of adding ounces, you probably keep the NPV the same, and keep the capex the same and just grow the NPV. And we know now how to really ramp value up on the project and make this even more attractive than it already is. And stepping back, so that's the simple part of the exploration story. Look, stepping back, we've still got a lot more to find. We've massively underexplored our land package. We mentioned, oh no, can we go back? Yes, we can. I mentioned the discovery at Rompus over there. On the western side of the project, 8 kilometres away is where we found the 1 million ounces. We've done almost no exploration in the middle. We've done a bit of base of till drilling around the existing deposits, obviously, as we've slowly stepped out, but we've really focused our attention on where the discoveries had been made and not had a lot of time or financial capacity to look around. And I've got a slide here. It is around the base of till. A base of till is an incredibly effective exploration technique used widely in Finland, and we've really done hardly any base of till compared to our competitors. And Rupert discovered Ikari following up on a single 0.2 gram a tonne base of till drill hole. We've got plenty of anomalous, that's what all the red crosses are, plenty of anomalous base of till. We've got boulders. We just need to do more work to define and prove that the more likely case that we haven't found the only economic instances of gold on the property. Like, clearly a lot of gold has flowed through these rocks, and we've just got to find out where it's been deposited elsewhere. I mentioned Southern Cross Gold, so we own 60% of Southern Cross Gold. I'm not going to go into a lot of detail on their assets. I think the market cap that they've got speaks for themselves. We invested. We acquired those projects, spent $6 million on them, spun them out, and within 2.5 years turned that into $50 million of paper value. So a very good demonstration of how to create value opportunistically, and now we're sitting, we're feeling pretty comfortable about the world with having that part of the portfolio. I don't know exactly how it's going to play out, but what I can say is it brings enormous optionality to Mawson, in the sense of, at one end of the spectrum, funding to fund our projects or other projects that we might acquire, right through to the obvious corporate activity that can come from controlling what is a really hot news story down on the ASX. They've got 3 drill rigs turning. The results come constantly, and we benefit from that, and the valuation speaks for itself. We're also, just to touch on another property, we're also exploring in Sweden, just over the border. We've got a property there called Skellefteå. 7 million ounces has come from within 22 kilometres of the property. We had outcropping gold there, never seen a drill hole. We acquired an option over the project. We put some holes into it over the summer, and we've got very high grades already from the second drill hole we put out of a 6-hole program. So we found a mineralised structure, work to follow up there, low cost earn in but high optionality on finding a new mine in an area that has demonstrated a lot of gold, and it's got some hungry mills that can, in my mind, I don't think the hurdle to find a project here is all that high, because you've got mills in the area that would take a good project. You don't need to go and build something new, you just got to find a nice little deposit. So we think there's a lot of opportunity there. In terms of next steps, add value through exploration, find more, delineate more, really add to the project that we've already defined. We've got now something that we can work with to de-risk the project through permitting and a little bit of engineering, and ready itself for the next stages and unwind this obvious discount that we have over the project. And obviously the exposure to Southern Cross brings enormous optionality as that escrow rolls off. The options to Mawson are huge, so very exciting opportunity.